The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Friday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN. Thanks so much for joining me. 9 a.m. Eastern Time. We got about 24 minutes to go until the opening bell, and we got markets a little bit lower. We get numbers this morning, and yeah, how about GDP? 1.4% is the rise for fourth quarter GDP. When you check out the headlines, economic growth slowing in the fourth quarter, hurt by the government shutdown. Now, there's been a lot of volatility in imports, in exports, with companies getting ahead of the April tariffs last year. That resulted in a lot of imports, and that all reflects on GDP. But what you have here as well is you have the government shutdown in there as well, consumer spending in there as well. The market was looking for at least 2.5. I say at least 2.5 and probably a bigger number from where it's been. 1.4% is the number on the GDP. So getting back to the charts, we got a little negative pressure coming in. Now, we were already in negative prices. We have the S&P's off about 15 points, trading at 68.61. NASDAQ 100, you're off about 0.3%, off 92 points at 24,766. The Dow right now off 0.2%. How about the Dow? Right back to this. You see this channel line, folks, that we're bouncing off right here? Okay. Check out this channel line. Yeah. You're talking about going back to the April lows when you come out of there. So the Dow, and almost you could argue an underbought position. We'll see if it can catch a bid today. There's going to be some pressure to the downside with that type of a GDP number. And man, it's like back and forth we go, right? We get a jobs number, we get a CPI number, we get a GDP number. Pretty remarkable. Okay, we jump over to yields. So on that news, you see the volatility at 8:30. We were up to about 113.02 since we got that GDP number. A little bit of lower price, higher yield there. But look, we're looking at a number right now in the 10-year at about 4.08. The dollar's had some real action lately, and we are right near 98. We were back above 98 recently. You take a look at the dollar on a daily. And yeah, right back to where we had support at the end of December. We'll see if that turns into resistance again like it did 15 days ago when we were up here February 5th. Going to be interesting to see how we come into today, folks, with the GDP number. You have metals pushing higher. Gold's up another $68, up 1.4% right now. You jump over to silver, up by $3.20, $80.81 right now for the price of silver, up 4.1%. Platinum up 3.1%. Copper right now flat at $5.74. The Commerce Department said the full effect of the government shutdown cannot be quantified, but one measurement, okay, the reduction in services provided, carved about 1 full percentage point. Full percentage point. Man, right? How about that? And that is the reduction in services provided by the federal government workers. Pretty remarkable. Give me 1 second, folks. Apologize. Okay. Forgive me. All right. Let's jump over to some of the action this morning, and you talk about it. Now, Blue Owl back in there again. Where did they sell those loans? To pension giants and its own insurer. Okay, so Blue Owl Capital, we talked about them yesterday. They're delaying getting money out of there, redemptions, okay? They found 4 buyers for a $1.4 billion portfolio of loans to help pay out investors, including 3 of North America's biggest pension funds and its own insurance firm. Whoa. The transaction highlights the rising entanglement between private credit and the insurance industry, with analysts warning that similar transactions could deepen the ties between those two parts of the non-bank sector and make it more difficult to track risk. You better believe it, man. Okay? You jump over to Blue Owl, catch a bid late yesterday, just like that. We're back to 1089. You're at 1120. And hey, anytime you get this type of risk, okay, yes, there's a potential for reward out there. But when you look at this equity, man, okay, you are below prices that you were trading at December of 2020. And how about that volume on Blue Owl? And yeah, their own insurance firm is like, we'll just take that. We'll just pay a price for that, right? And some pension funds as you get intertwined on everything. So overall last year, the economy expanded 2.2% is the number on the GDP. Okay, you got a 1.4% in the fourth quarter. As I mentioned, the government shuts down, but look at the estimates. 2.8% was the GDP number. Personal consumption, right in line. The PCE, price index, hotter than expected. So GDP misses by 50%, and the PCE runs hot. Well, that's a problem. Sometimes the Fed, I've heard Powell allude to occasionally, he's talking about the data they're saying. They see a lot of data. They see all the data we see. They see a lot of data, a lot more than we're getting, whether you're watching the Journal, Bloomberg, whatever it is. And, there are some Fed governors out there, and they're probably seeing some of this data, right? They're seeing a government shutdown. They're seeing that slowing. They're seeing, and listen, that's real, man. Okay, those services provided and the not necessarily trickle-down effect, right? But that reverberation through the economy when you lose such a large portion, and then the PCE runs a little hot. And that PCE potentially coming into what's happening. No, I was going to say in yields. Yeah, as you have lower price, higher yield. A little bit of a bounce, but we're going to be running into a problem if we have inflation hot and we have the GDP running at 1.4%. I don't expect the GDP is going to run at 1.4%, but there's some risks, and you're seeing those risks play out today. Now let's jump over to some of the big dogs. NVIDIA shares slightly in the red, off about $1 this morning. Amazon slightly in the green. Microsoft shares, look at this volatility. Microsoft back in the red. We're up to over 400 briefly. And we take a look at crude. And we've backed off a bit. Crude hit $67. We're back at $66.15. But yeah, you better believe there's risks. Amazing, the prediction markets. Amazing how insightful they can be. And they almost encourage insider trading, because how else are they going to solve the market, right? And you're seeing that play out in a big way right now, and it played out ahead of Venezuela. Oil prices pushing almost $67 right now. And nonetheless, the headline speaks for itself, that we could have attacking days. We'll see how the negotiations, but nonetheless, the timeline was out there 10 days. Hey, I'm out there reading articles about full moons, rightfully so. You're not attacking under a full moon. Maybe you are. It's amazing that you think about what level are you on, right? In terms of when are you going to attack, if you're going to attack, is in negotiation. But hey, crude market, pay attention, because that's $66. How about that for a daily? Yesterday, you break above this consolidation, and you do it on volume. S&P's off by 21. We're coming back looking at equities, folks. Stay tuned.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We have the S&Ps down by 24 points right now, trading at 68.53. NASDAQ 100 off by 0.5%, 24,726. You get the Dow off by 0.3%, bumping up against the bottom part of its channel line. And the Russell right now off by a full percentage, 26.43. Checking in on yields with about 11 minutes to go until the opening bell. Not too much volatility following a GDP number that was extremely light on a lot of government contribution, and then you have the PCE a little bit hot. All right, let's talk a little bit of what's going on in Iran. Good piece from the Journal here, just in terms of the size and scope of the military hardware pouring into the Middle East. Check it out. Let me see if I can blow this up even a little bit more. Here we go. So look at this, man. Of course, here's Iran. All these warships, Qatar, we're talking about support aircraft, aircraft carriers. Out here, the USS Abraham Lincoln, a carrier strike group. Air defense systems. And then how about these planes, man? The U.S. has deployed F-22s and F-35s. Stealth designs allow them to evade being targeted by surface-to-air missiles. Those are the same jets that escort the B-2 stealth bombers. So you got the planes there that are escorting the ones that could be the bombers if that's the route. Jamming aircraft likely used to disrupt the missile launchers. Look at all these things, man. The Navy has 13 ships in the region. Now, this doesn't mean that like a strike's imminent, okay? You want to represent the strongest hand either way. And I'm just talking about even just, energy plays, crude plays right now. You look at this map of the S&P 500, right? Energy was on fire yesterday. Okay? You had Exxon, Chevron. Yeah, Oxy was up 10%. Different story. You jump back to crude, and you take a look at the volume. Look at the way we just broke above that consolidation. Okay, there's a real potential for this market to jump higher. You do it on 430,000 shares. Now, you did not break above this on volume, though. Okay, we're coming back today. Remarkably, the high there had 528,000 contracts, not shares, in that crude futures contract. We break above it. Technically, you do it on lighter volume, but it's an art, not a science, folks. There is strength when you break above that high on the most volume we've done in a month. Okay, that is strength. Not quite as strong as that day, but there's nothing definitive in the markets, and that is strength. Okay, yeah, not quite as strong. It would have been nice if you take that out with volume, but you can't ignore that was strength yesterday. The most volume that we've done since that day, and on record. You're talking about one of the strongest days out there. Crude plows higher on volume, up to a high of 66.90. We're trading at 66.03. But yeah, and how about the aircraft carriers? USS Abraham Lincoln, commission 1989, baby. Speed 30 knots. Crew 3,200. Wow, on the ship, and then 2480 on the air wing. Oh, how about these things? Look at these. You got the submarines in here. Combat ships. Helicopters. Look at this presence, man. And then you get down to the air defense systems. U.S. ship deployments in the past conflicts. And look at the Middle East. Right now. This is the one right now we're in. Not even close to the amount of aircraft carriers, but surface warship, 14 of them. And yeah, speculation abounds, and I'm sure everything's getting weighed. Maybe it is. So articles like this, but initial limited strike to force Iran into a nuclear deal. Everything is a negotiation, right? Are we negotiating? Always. That line has a lot of truth in many aspects of life. Are we negotiating? Always. Same thing there. The initial strike, so anything's on the table. But, man, pay attention to that crude. Accelerates higher. You do it on volume. We're backing off a bit. We'll see if we get some volume on this pullback in crude. We check out the volume in metals. It would really be nice to have a day that might be over 100,000 contracts. It looks like we may get it today. We're off to the races with 51,000 contracts. And I say that almost with some snark and sarcasm. But, man, you're talking about a gold contract, folks. Over the last couple days, you've traded from 48.68 to 5,042, so almost $200 to the upside. And meanwhile, over those 2 days, you've done 176,000 contracts in 2 days. That's nothing. The day prior, you did 161,000 contracts to the downside. In 2 days, you've gotten it all back on very light volume. There's no volume in this market right now in gold. All right, today's Friday. We have a very short trading week, right? We're 4-day trading week. We're at 389,000 contracts. Not fair to compare it to the 620 we got last week. But, folks, extremely thin volume in this market. That bounce was real the week of February 2nd, but you're talking about 2 full weeks of no action right now in this market above 5,000. You jump over to silver, not quite as pronounced, but pretty close. Look at this weekly volume on silver. The green bar on silver this week is at 173,000 contracts, going into 318, 663, and 1.2 million on the downside. Let's jump around to some of the banks. A little volatility in the last couple of weeks. We jump to the daily. Yeah, no volume there as well. Look at the volume yesterday. JP Morgan, No volume whatsoever. Two of the lightest volume days we've seen going back to January 9th in JP Morgan. And you take a look at the S&P volume right now. Yeah, basically comparative to the volume we got yesterday. You take a look at the NASDAQ 100. Nothing that stands out too dramatic. All right, just jumping around to some equities. Netflix, slightly in the red this morning. Talk about a pullback, man. Jump over to Disney shares right now. Slightly in the red as well. Jump over to Warner Brothers Discovery. 28.70, the bid ask. And the volatility continuing on Paramount. 10.94, we talk about a pullback as well. We come back, we test those lows of August. All right, folks, S&P's in the red. We're coming back to digest that GDP number. We're coming back for the opening bell, folks.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got equities open. You got a NASDAQ 100 right now, down 154 points. S&P's off by 26. And see where we are? Right at those lows of yesterday. All right, we'll back this out a little bit. And yeah, literally to the tick, right near the lows of 1 o'clock p.m. yesterday in the S&Ps, as well as about 3 p.m. Eastern time in the S&Ps. You're off by 25 points. NASDAQ 100, we're below yesterday's lows right now, off 135 points. off 0.6%. The Dow just got slightly below that level, but again, pretty close to where we were intraday yesterday. And you jump over to the Russell, similar action, right? We're getting a little bit of a bounce in the Russell right now, only off by 0.6%. You were off a full percentage point. We jump back to metals. You gold traders out there, as you know, I'm sure we can get some action on Friday. And hold on to your hats, folks. When you got GDP and PCE numbers like we just got, the dollar, very strong lately. 97.93, holding up well. And we check back in on crude right now. 66.17 for that crude market. We'll go back to yields. So right now we get the 10-year at 4.07%. Take a look at this thing on a daily. Now on a weekly basis, I just jumped to the weekly. You know, we're pulling back on lighter volume. You have a short trading week, but even with 4 trading days, we're pulling back right now on 7.6 million contracts on the 10-year. You traded higher on 12.4, 11.06, and 9.5 in the last 3 weeks. So it's a pullback on lighter volume, even over 4 trading days. Yeah, they're out there talking about it in the Tiger's Den. Appreciate all the great contributions in the Tiger's Den. Folks, if you haven't checked it out yet, please head on over to the front page of TFNN. Head on over to the services tab. Join that Tiger's Den. It's $1 a year. We only charge $1 a year to keep the riffraff out, the scams, the spammers, okay? There's great information out there. Thank you for all the traders in the den, the contributions you make. I'm in there, like I was talking about this morning. IBRX getting a lot of attention lately. Thanks to Dan, all you guys and girls in the den, for sure. I'm in there learning, trying to learn every day myself, folks, in that Tiger's Den. Check it out. But yeah, they're talking about the potential, okay? Today, we'll see. We keep getting maybe we're going to get them, maybe not. Maybe you'll get a tariff ruling today. It's possible. And yeah, well, then what happens? Are they going to potentially return those tariffs? Are they not? U.S. consumers potentially burdening between 0 and 100% of the cost of those tariffs. That's a number that I can be sure of. It's somewhere in between, folks. The New York Fed says consumers are bearing about 90% of that cost. The president would disagree, but I'll tell you, it's probably somewhere in between. Jump over to the home builders. So check out the weekly volume on the pullback going on right now. I like these home builders, folks. You're going to face some volatility right now, but on a longer term basis, I like the acceleration. You have volume up here. Jump into Lennar. We've talked about it before. But this is how you want to see a stock trade. Doesn't mean it's always going to work out, folks. But this thing, I mean, just look at how on the chart, when you're trading higher, it's green. Yeah, you pull back, but compared to that run higher, you trade higher in the pop, it's green. You pull back January 19th and January 26th on lighter volume. You push higher in volume, and we're backing off a bit on 6 million shares for the entire week. DR Horton as well. No real volume at all. Meanwhile, look at the volume that we just had from January all the way up to the run-up at the highs, and look at it collectively, okay? You don't have to get caught up in 1,000,000%. This is my approach. And yes, you want to keep, risk in check. Don't overtrade, right? Look for strong signals in the market, but you don't have to have a definitive line of what you do, saying that you traded higher on lighter volume, and you did. This would have been nice the week of February 9th if you had some more volume, right, to break above this. But look at the collectivity of the fact that since the beginning of the year, you've traded from about 140 up to now 168 was the high of last week. And throughout that period of time, you've had a sustained period of volume. And now you're getting a slight pullback on lighter volume. And the other one is KB. You're bumping up against this line on KB from December on their last earnings, which could be a little bit of a headwind. But up by 0.5% today. And look at this market catching a bid right out of the gate. Look at this bar. Okay. We're off to the races, folks. NASDAQ 100, we're going to be green by the time I finish this sentence. Look at this. Quite the bar, quite the volume kick. And you may get some volume today, man, with this type of a turnaround right on the open. All right, we jump to some other equities. Dropbox, they're out with their numbers. Look at this little engulfing we got from opening lower, pushing higher. Dropbox, they earned 68 cents a share. They beat by a penny. Gotta love to beat by a penny. As NASDAQ goes positive, as we were just saying. Revenue, a slight beat as well. And so, yeah, you start out lower, but whatever they're talking about, the market's okay with it. As you push higher on the open, we take a look at a longer-term chart of this thing. Hey, that's some nice buying. You know, what I love about a trade like this, folks, okay, your back's against the wall here, right? If this is the buy, then you shouldn't be breaking this level right now, okay? Because you break below this level, and your next stop's right here. And that's a 20% pullback from where we're at. So, you know, when I'm trading equities like this, I'm trying to find a bid in it. Unless you're just doing some kind of tiny allocation, you believe in the company, you're just going to set it and forget it and not manage it, okay? If you're trying to get in for swing trades or something like that, and you're in a position like this, now this is not a recommendation to buy, folks, because look at all this volume we have on the downside on a weekly basis. You're going to get some volume today with earnings. But you're not going to get above this bar on 30 million shares, most likely. We jump over the daily. That was a nice day yesterday. But again, look at this day on February 3rd that you're trading into. Tremendous. 7.8 million shares. It's going to be tough to get that even on earnings day. But hey, we're 8 minutes into the day. We'll see where we go. Let's check out the tech leaders. NVIDIA. We open in the green as this market charges higher. Now, folks, quick fingers on a Friday where we got a GDP print like we just got. And I say quick fingers as in this market is a two-way market. It's a two-click market. Man, Basil Chapman coming up next with the Tiger Technicians Hour. So the first move is not always the only move that matters. I think we'll get some action in both directions today. We'll see where the final momentum carries us. We got markets slightly in the red. Come right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Look at this run, folks. NASDAQ 100. We're coming up to the pre-market highs right now. You're up by 65 points, and you just traded from 24,678. You're up 160 points from there. 24,932. S&P is positive by 5. You get the Dow in the negative by 155 points. The Russell off by 7. Yeah, you jump over to Walmart. What's going on with Walmart right now? Earnings yesterday, quite the sell-off on Tuesday. They're selling it again today. Walmart off by $2.80 right now. Check out the daily on this thing. It's been a heck of a run. All good things must come to an end. And even if that's in the short term. You know, this company's firing on all cylinders, folks. And we just completed a perfect A to B, C to D extension for that 1-to-1. That's coming off the lows of late 2023. You pull back, you do the exact same run higher, and we're backing off. And hey, on a weekly basis, you got volume. Okay, this is 4 trading days. You're doing 120 million shares, and we got a full day today. You're going to break this, and you're going to do it on volume. You're going to break the last 2 weeks on Walmart. So, yeah, that's saying in the short term, you're pulling back right now. Jump over to some other retailers. Target shares been under pressure. Up positive by less than $1 right now. No real action. Jump over to TJX. This thing's been in quite an uptrend channel. Just above that channel, actually. No volume this week as well. All right, let's jump over the heat map. For your S&P 500, what's in the green right now? Only the biggest equities out there. Everything else is in the red. I generalize. We got Corning's up by 4%. GE's up by 2% right now. Salesforce, Palo Alto, slightly in the green. Amazon's up by 0.8. Look at this. Micron up by almost 3%. Broadcom up by 1%. Lam up by 2%. AMAT. Google up by 2.2%. Let's check out Google. Boy, look at this, folks. On a weekly basis. Look at this weekly bounce. Nothing. Doing 56 million shares on a weekly basis, going into 123 and 171. Now, it's 4 days, but you're doing half the volume of we did last week and 1/3 of the volume that we did 2 weeks ago on Google. Check out the daily. See if we can get some volume going today in Google. Check in on metals. All right, now we're getting some volume here. Okay, you get the gold contract right now. We're up almost 60,000 contracts. You did 83 all day yesterday, and you're at 60 already. Gold's up by $82, up 1.6%. You got highs out here from February 11th of 51.44. And that pullback on volume from the 12th from 51.22. We're trading at 5,078. And silver, yeah, we'll see if we can get some volume in silver. 20,000 contracts going into 38 and 44 the 2 prior days on silver. We jump over the weekly on silver. Just nothing. 175,000 contracts all week on a short week. We'll see what we put up today. All right, we took a look at the S&P 500. You take a look at the NASDAQ. Google, Micron, Broadcom, the biggest ones out there. AppLovin up by 3.3%. We jump over the Dow. So the Dow's off 190. Walmart. Now, what's interesting in the Dow, okay, Walmart's a huge company. They're a $1 trillion company, folks, but they're only $122 equity. So in a price-weighted index like the Dow, their contribution is not that dramatic. Compare that with a Goldman Sachs that trades at $904 with a market cap 1/4 of the size of Walmart. But Goldman Sachs alone today, let's check it out, because, yeah, you're down by $12 today alone. That would be akin to like a 10% pullback in Walmart. So Goldman's off by $12, off 1.4%. Check out the daily. Boy, we've just been in a consolidation really since this acceleration with all that volume and options expiration in December, right? We traded to a high of about $900 on that day. And since then, that's where we have support. And you're just oscillating around between about 900 and just above 950. Back to a weekly for a moment. So there's that acceleration on a weekly basis. And look how you do it, right? This is how, now that's Christmas week, that's New Year's week, but you accelerate higher on volume, and then we get the drop-off, and there's a consolidation. But that's a little bit of a warning the last couple of weeks. Goldman's off by 1.2% right now. We check out the banks. Morgan Stanley off a similar 1.2%. How about that volume last week? All right, watch out on these banking stocks, folks. It's been a heck of a run. And look at this volume. Let's see, Morgan Stanley. And get well above the 1-to-1 expansion. Just a heck of a run. You go from $70 up to $140. That's a $70 run higher. You pull back to $93, and then you do a $100 run to $192.68. But we're backing off with some volume right now on these banks. Morgan Stanley. Jump over to JP Morgan. Off by 0.6%. Not quite the same deal. No volume to the downside in JP Morgan right now. Bank of America completes a perfect A to B, C to D. Same deal. Yeah, you got a little selling in Bank of America. Look at the sell-off last week. You almost engulfed the prior week. Let's zoom in on this. Let's just take this off for clarity. Look at this. You engulfed the entire prior week, and you do it on volume the week of February 9th, and you're going to trade lower on lighter volume on a holiday week. Yeah, somewhat similar for Citi, but you got some nice volume here for Citi, pushing higher. All right, it's the big tech stocks right now carrying this market, folks. Google up by 2.2%. NVIDIA in the green. Micron up by 2% as well. Broadcom up by 1.5%. And Lam up by 2.8%. Oh boy, look at this. I mean, look at it. So this is AppLovin, folks. You're down from a double top high of near $740. You make it to a high of $738 in December before you rip lower. You accelerate lower on volume on their numbers, and we're going to get a bounce on like vapor thin volume. You're up by 2.7% right now on AppLovin. You go back to the daily. Yeah, you rip lower after their numbers, and since then you're just rising higher on filling that gap, but filling it on very light volume. Gold holding up well, up 1.6%. We check back in on that dollar, 97.93. And yields just chopping around, 4.07 right now, the yield on that 10-year. Okay, folks, S&P's off by 9. We got some action in this market. Look at this. You accelerate higher. As I was saying, we're going to get volatility in two ways. You trade up to 68.84. Yeah, we're about 15 points off that level right now. S&P's off by 7, NASDAQ 100 positive by 20. One more segment. We're coming right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We get the S&Ps negative by single digits, off by 6 points. The NASDAQ positive by single digits. We got a little volatility in both directions to kick things off. You jump over to the VIX, 2061 right now in that volatility index. All right. We take a look at the airlines as you have crude prices rising. American right now up by 0.4%. Delta down by 0.4. You jump over to United shares off by about 0.6% right now. Credit card companies with some volatility to the downside yesterday. You're flat right now on MasterCard, Visa flat as well. Yeah, Newmont was out with their numbers last night. You rip lower in the pre-market, you get it back by the time we open almost. You're down by $3. You take a look at Newmont. On a weekly basis, you trade lower from that high at 134.88. And since then, we're coming up to that area on lighter volume right now. And on a weekly basis right now, it's going to be a decent week, okay? on Newmont earnings. We're going to do a big number today, and you're at 26 million shares right now on a shortened week going into 37. If you average out the 4 days over 5, you'll be pretty close to what we did last week. See if we can trade higher. Newmont in the red right now on their numbers, off by 2.5%. Jump over the silver stocks. How about First Majestic yesterday on their numbers? You accelerate higher. We're not getting above the highs on volume, though. Okay, you kind of have this pullback. You check out the weekly right now. And even on a run like that last week, folks, you're going to have a much lighter week on volume. Again, even with the type of action, you got an earnings week. The thing's up 10% last week. And even if you average out the 4 days into 5, you're still at 68 million going into 117. We'll see how today plays out. Hey, keep those fingers quick. We got a two-way market intraday every single day this week, and we'll see if it plays out today. But as we kick things off, quite the volatility. S&P's off by 3. NASDAQ slightly in the green. Folks, thanks so much for joining me this morning, kicking your day off right here. Stay tuned. Basil Chapman's up next, and I'll see you at 3 o'clock for the Tom O'Brien Show, folks. Have a great Friday. Thanks so much.